Good morning, guys. Welcome to this Friday, June 20th. It is summer solstice or midsummer or it's beginning of summer. It's the longest day of the year. And that just marks that Christmas is getting pretty close. Yeah, I'm having unhealthy obsession with Christmas. What can I say? Anyway, the longest day of the year, markets are a little bit perky in the morning, I had to say. A little bit up to the upside. Yesterday's a little short day, half a trading day. Actually, it was interesting because the overnight started off to the downside pretty hard, and then it actually recovered a little bit from there. Let me see if I can move this up a little bit first. Yeah, so here you have the overnight going into the Juneteenth. They took it quite a bit lower. The whole day session from Juneteenth was on the downside. I thought, and this was after Powell's comments, so that I thought like, okay, here you go, Powell has to cold water on it, and the market is going to have this could be the start of a little sell-off. Turns out that so far the overnight has defied that, and we are right back here to the attractor at 6,040s. So that's why we get started this morning. Now, financial news wise, we have um, Philly Fed manufacturing at 8:30, leading indicators at 10, and that's about it. So those are the two pieces of news, 8:30 and 10, we had to work with. And none of them I think is going to do major impacts. And maybe leading indicators could, but I don't think it's going to be a big reaction there. And of course, the Iran-Israeli war is the one which is on everyone's mind, and headlines can come out anytime from there. But so far, the market is not reacting in any negative way to it. So uh, that can change in a heartbeat. Depends on what happens, how things develop. So and a very fluid situation over there. But right now, market actually showing some strength going into this Friday, and we'll take it. So back up here against the 6,040s, pretty freaking close to the highs. This is one of these things. It's kind of run out of gas here. We need a piece of news to drive it to the last leg here for a move to the upside now. You can get trade deals could come out. Could be a lot of things positive happening, which may move the market higher. There's also plenty of potential curveballs. So I'm not sure we're gonna get usually in this time of the year, late June, July, August, you get a pretty weak market. It'll sell off with a lot of weakness. I'm not sure it's gonna be anyone's guess if that happens this year, given all the different dynamics and parameters we had to work with. But at this point, I'm gonna start off flat out range bound. Start with a slight bias to the upside, range bound. We still have that lower edge, the 85, the 85 to 90s. We have the upper edges here between 6,065 and the 90s, an area of resistance, and that's what we're working with. So starting off range bound, looking to buy a weakness just to get started to see if this little overnight move gets any legs and starts heading higher. So looking to buy against these the 6,030s and 15s down to the 6,000s for rotations back up. And on the way and below that, I'll take off the any bias I have to the upside and start thinking about looking for maybe test of the lows here, the 85. This is actually in the 85-90s, and here you have the 70s. So the 85-90 edge is really up here. Then here you have the last one to worry about is the 70s here. So they start taking out the support area, as I said, the 85-90s. I'm gonna stay on the short side and look for potential moves lower at that point. And if they can hold that above the 90s, 6,090s, we start thinking about the long side in a bigger way. But right now we're kind of backing off that lower edge, heading it right pretty much in the middle of this at 6,040s. If it starts heading higher, we're looking for short setups against resistance. I would say we're going to start up here at the 65s. There could be one here at the 50s. I'm going to start at 65 really, and then 70, 80 up to the 90s here. So these areas of resistance are going to be the better one to lean against. And of course, the lower ones here, the 6,015s down to the 59.85s on the lower end of this. So that's kind of how we get started. So looking to get short against the 65s, 70s, 80s, and 90s. Looking to buy against the 30s, the 15s, 05s, rotations back up. Below the 05s, gonna start thinking about the short side, but we still had to buy, could buy about, could get long against the 6000s and the 59 and 90s here for rotations back up again. So that's how we get started. Let's see how this whole thing develops. Very surprised though that we get a run up here. When I saw this Juneteenth little baby day to the downside, I figured, oh crap, here we go. Powell did it again. And yeah, that whole thing is just starting to defy common sense. You know, when the inflation was a lot higher, the guy right before the election dropped the rate twice, in a big way too. And then now afterward, after the election, it's like, no, no hurry now. We can just take our sweet old time. There's no hurry to drop any rates now. So, and the inflation is at 2%. So go figure, right? I mean, it kind of screams politics, and they have all these tariff excuses, what could potentially happen, and that's why they're doing it. So anyway, we'll see how this shakes out. Looking at the bonds, though, bonds and Nasdaq, bond market, pretty much holding in this range. I would say range bound bond trading. If anything, I would start with a slight bias to the downside, given this move to the downside. So I would look to sell against the 113.04s, 113.10s for rotations back down. And about the 113.10s, I'll just back range bound. But if this little move in the overnight gets any traction, we could potentially see a little bit lower prices. If they start taking out the lows at that lower edge at the 11.10 to 15, that would be a concern. But at this point, we're still pretty darn range bound on the bonds. So starting off range bound, going into a little summer weekend here without any crazy stuff happening, at least for now. It could certainly still happen. Could certainly still happen. All right, so looking for shorts against the 1304s, 1310s. If they take out the 1310s, go back range bound, and then just look for to fade the edges. You still have edges at 16, 20, 26 up to the 114s. And you look to buy weakness at this point again, 1228, 1222, 1218s down to the 1210s for rotations back up. So 3, maybe 4 levels in each direction. Let's look for that. But you can see like there's been a nice little grind to the downside on the bond. So yields slowly coming up a little bit. Bonds grinding lower. We'll see what happens. On the Nasdaq, also nicely move to the upside. We'll take it. We'll take any moves we get to the upside. But they were down here probing that lower edge at the 700s yesterday. It got me really concerned. I was looking at that thing. Oh crap! Here we go. And we're gonna head lower. Powell just burst that little bubble we had, to the upside, but so far market is kind of defying that. Here we see a little baby day to the downside. It opened, run right back up again, and so far we're looking at some strength. So I'm going to be starting off looking to buy a weakness, 950s, 910s down to the 850s. Let's start trading below that 850s. We take off the long bias and go back range bound. Still looking to buy against the 850s, 820s. 780s down to the 750s, all the way down to 700s really, before we start thinking about the short side again. So that's that lower edge. They start taking that out, yeah, we're in trouble at that point. So watch that 21,700. So far that was defended yesterday. It didn't look like it until the market reopened and it took it back up again, but that was a little bit unnerving. And on the way up, looking for short setups up to that 22,080 to 22,200s. I think up to about the 22,080 to 22,100s at the nice ledge right there. If they start trading above that, I would start leaning in on the long side. So that would be this upper area. So looking for shorts against that 22,000, 22,030, 60 up to that 22,090 level. Above 90, leaning on the long side, we may head higher. We may see a finally then burst. Look at how close they are. They're taking out the highs, all-time highs on the Nasdaq. It would suck to see that happen, all-time highs and then complete collapse. Like, yeah, we're in July now. We're gonna crash. We're gonna get the sell-off. Anyway, so many things can change. I mean, you can get trade deals come out. You can get all sorts of stuff happening. we can get that Iranian deal sorted out. They can back off their nuclear ambitions and everything could be over there, and market's going to take that very positively. Anyway, looking at finally oil and gold. So on the ES and Nasdaq starting off with a slight bias to the upside. When it comes to the oil and gold, gold is backing off a little bit. Geopolitical concerns are going to be higher, but the fact that they're backing off, I'll take that as an indication that people are looking at this Israeli campaign and the Iranians being on their backs, that they're not going to survive this. So I think the outcome markets are starting to get a little bit more comfortable that it's not going to be a bigger conflict in the Middle East. A little bit too early to say though. Actually, it's pretty early to say, but it's if gold is trading lower, you would expect gold to be staying higher or maybe even trade higher if the concerns was there for a wide open bigger conflict. So backing off a little bit, we are down here in that low volume area again. I think the attractor next is at 33.40s. And so starting off with a slight bias to the downside. Look at the sell strength, 33.75s, 88 and 90s up to the 33.95s. So rotations back down. Above 95s, I think we are heading right back up to that 34.05 attractor. So you could above the 88s, really. You can probably make that assumption. I would say the last one would be at the 33.95 for a short setup. But these two are definitely looking for short setups against the 75s and the 88s for rotations back down, and let's see how far they can take it. And if they start heading lower, they take out that 33.50, 56, 57. I would just be looking for a run down here to the 40s, next level down. So it could be a nice little run down there. So not a lot of range left there, but it's plenty of range to get a good trade in. So that's how we get started on gold. Slight bias to the downside to get started. On oil, it had a big reaction here going in early on, so I'm not sure what that was all about, but a nice little pop on every market really. So down here, oil, a little reaction to the downside. They're pretty range bound right now, though. I would say that oil is finding balance right now. This is pretty much a funding balance right here at the 73.30 to 74s. I would start range bound in this range right now. Risk premium. Let's call that risk premium. And as soon as these hostilities simmer down and stop, and the result one way or the other, you'll probably see that risk premium come right back down again. But right now, I would start range bound looking to sell strength, 73.60s, 74.20s. And this level should be down here. There. So I'm looking for short setups against 73.60s, 74.20s up to the 74.60s. I'm going to buy against the 72.60s, 72 10 to 15, 71.80s for down to the 71.50s for rotations back up. So I would say below 71.50s, start thinking about retracement trade. Above the 74.60s, start thinking about potential breakout to the upside. At that point, I think they may have something may be going on. So. But anyway, so range bound trading on oil, pretty much holding in at around that 73.50, 74 area. All right, so that's how we get started. This Friday, June 20th, longest day of the year. Not longest trading day, but longest day of the year. And that's it. We'll celebrate that. Okay. All right, man. So good trading, guys. I'll wrap it there. We'll see you guys back at 11:30. Good trading, and let's see how if we get some legs out of this little rally, this little whole thing starts moving. All righty, guys, later.